Traders, welcome back to another Relentless video. So yesterday we looked at the support trades, how effective they are when we buy in low correctly and the trade works out well, the kind of green that we can see, we can be making a killing. We looked at all of that yesterday. We looked at how to identify support, how to map out our pivot levels, especially in relation to the VWAP to get that dual support alignment. We looked at a bunch of different things yesterday in terms of winning trades. We checked out volume as well in correlation to the candlesticks. Today, we're going to look at that all from the perspective now of the losing trades to see what it is that we want to avoid when trading the lows. So I got a couple of setups here, a couple of videos, and I will put the links for these videos in the description. The last time I didn't do that, which I can still do. I'll update that tonight. Now let's jump into it. I do want to say, guys, hit that thumbs up button because it took me a while to find these videos. And there's definitely more examples out there, but you guys know the way how I label the videos. It might not be the best way. You know, this was making me think. So, yeah. It took a lot of combing through. Anyhow, let's jump right into it. So this first video is gonna be on ADGI on the 12th, the 16th rather, the 16th of December 2021, around the hour and 5 mark. Let's check it out. So I'm coming in. A couple of things to keep in mind. I do have some pivot levels drawn out for the previous 5-day levels, and it doesn't look bad right now. We got highs of 834 ADGI and lows around $8 at the whole dollar psychological support and resistance area. So let's watch, let's see where that trade comes in and my attempt at the level. Now, I'm already noticing one thing. The volume here could be a little distorted in terms of the other candlesticks, because sometimes when you update the charting, the volume will kind of be, you know, more what's the word I'm looking for here, organized. Let's say organized, right? But assuming that the volume here isn't as high, considering that, you know, from 834 down to 802, the candles doesn't look terrible, but we could see they're still a little on the higher side compared to our bigger green bars. So that's something that I'm noticing. Also, we're not testing the level here for the first time. We already came back down. Recently, you guys have been hearing me say that I love to take the trade on the first test of the level. We've already came down 1, 2, we can say, let's say one time really to the trend line, and it's already bounced up there, let's say at least 15 to 20 cents. And we can come back a little bit more too, to get a little bit more context. So I went from 8 to 815 for the high of that. Well, 820 actually, the high of that candle. It's showing, let's see, there's 9. Well, I didn't really see artists going through a 20, but it's saying the highest 20. Right, so that's already one bounce, and we can see right there 15, 16, and look at that big seller that comes in there. 206,000 share flashes on the level 2. Let's see if we can catch that. Look at, well, 300,000 shares. 300,000 shares at 810. I don't know if I noticed this real time, because you see how it flashes and switches off. So right here we're coming into the level 790, our previous high day level. I'm watching there. By the way, I'll remove the webcam for the time being. So let's fast forward to where I actually get long into the trade. So it comes back down. Once again, we've tested. We can see the reasons why. We can already see why this is going to be a losing trade. Look at the volume here when we had this pullback, right? See how, okay, we have the channel, right? We have the high, we have the low, and look at the volume here, the selling volume compared to our green candles. It's on the lower side. Here, our selling volume is on the higher side, very close in proximity to our two big green candles. These are big green candles. These red candles are very small and compact. So why is it that we're having so much volume to the sell side? That is a sign right there that things are about to reverse. Once again, I know the 5-minute chart is a little distorted, but let's assume this volume is also a little on the higher side. We got to be very careful with this. And of course, the level 2 also showed a sign, which I believe I might have missed, because if I saw that 300,000 share seller, I'm very, very, very certain, 100% certain, I would have not have been looking at this thing at 790. But anyhow, I'm long right there, 92, 1,000 shares. So let's watch this play out. And I'm looking for this thing to bounce back to 8, get back to 805, 810, 815, 820, and then essentially retest the highs if we can get all the way up there. So it's kind of doing its thing. It's doing its thing. There's 90. I believe I had about a 10-cent stop in here. I can't remember exactly because it was such a while ago. You see how it's hanging around the level. That's a good sign, but in normal circumstances when the setup is actually very, very good. Right here, the setup is not good. And these are just, the things that I was missing. When I go back to December, and I even just now combing through a lot of these videos, I was surprised as to how many trades off the lows I was taking. In fact, in some days, it looks like I was just looking to trade off the lows, which is so surprising to me. I mean, it goes to show how, sometimes your style can kind of change over time and evolve. And it was working out well for the most part when I was reading doing the analysis correctly. So you'll see I stopped out there at 80 as it came down. But, looking at this charting, it's like all the signs weren't there, All the signs were not there. It wasn't completely aligning. There were a few factors, subtle factors that were going against it. Okay, on the grand scheme, we can say this charting looks okay, looks good. But when we dial into the setups, hey, volume here's a little high. Volume here's a little high. Big seller on the level 2. These are the things that we have to notice. And also, it was not the first attempt coming down. You can see, even if I had gotten long on the very first attempt coming down at 790, I'd have been long right here. Right, I'd have been long right here, and I could have already sold half up there at 815 for 15 cents. And even if I said, okay, I'm willing to hold break even on the other half, at least it's still a winning trade with 50% of the position versus a losing trade. So these are the small differences in the winning and losing trades, guys. It's sometimes the smallest things. So real time, as the stocks are moving up, we have to do our best real time to make sense of the entries. Right, I got back in at 92 right here as it curled back up. Similar attempt, now again retook the level, watching for the 5-minute candle to make the new high, and it curled up a little bit. I believe we made back a little bit of something there. In at 95, in at 92, out at 99. So there's a couple cents. It looks like we were a little bit more green in the trade before it came down, though. Let's see. And got to highs of 804, 808. I sold half. And I might have sold the other half, break even? You see how fast it came down there? Yeah, so just to break even on that last position. That's a decent exit as it came down there with some selling pressure. Okay, moving on to video number 2. Guys, be sure to hit that thumbs up button. Don't forget, it's one of the best ways to support the channel. So moving on to video number 2. Looks like I needed a haircut here, man. But anyhows, January 4th, 2022, NLSP at 57. Let's see. In at 11, out at 9. So I had a previous 5-day level marked out. What's this? Around like 175, 178. Let's see, around, yeah, around 170 plus or minus. Let's see, 198. But I didn't put a pivot around the level of $2. Definitely deserved one. So before I even look at this charting, there's a couple of things that I'm noticing. And one thing that's really the number one factor. I know there's going to be people watching this video who, it might be their first time coming across the channel, which is all right. Because I was about to make a reference to today's trading, and that is in reference to this stock potentially being on the backside of the move. After a strong series of green candles like this, we got to always have that thought in our head that the stock could be on the backside of the move. It looks like right here I was attempting the first 1 minute candle to make the new high. And, the volume bar was decent here, but we have this huge topping wick, and that's not a good sign. Followed by a very solid red candle. So is this stock on the backside, and is that it for that move that was coming in there? So I took the long at 196. VWAP was at 186. So I'm not sure if I was giving it 10 cents of space, which would have been 150. And maybe looking for the curl back up over the level right here of about 215 over this red candle. That would be my guess, right? Because it was a while back. And I guess we could listen into some of the audio as we go here. But I do want to skip around for time, right? So the new candle opens up. We're right at the VWAP level. This is moment of truth. Is this thing going to hold or not? I'm in at 96. And, sometimes it looks like it was consolidating for a while at this level. So I'm not going to say the entry was too high. Let's see. And yeah, so I got long as bids. Okay, so we had some buyers come. I feel like I remember this day. We had some buyers coming in at 96, so I took the long. And looking for that curl back up. It's not going to happen though. I got a great fill in there. We proceed to pull back to 90, 88. So I looking back at this, the charting is just too extended, man. The charting here is just way too extended. Topping wick, which is a sign of reversal, is this on the backside? And there's a very good chance if we skip ahead in this video, it'll be on the backside. So these are trades, in my opinion, to avoid. I mean, we can clearly see that, the bulk of the move has happened. I'm up to some $200, 250, in a couple of scalp attempts all along on this move up. It's like at this point, especially, I got to ask myself, am I willing to give back all the profits on the day for this one trade? The answer is no. And so right here would be a good place to also reduce to half size or maybe even more. If I come down to half size and I give back $100 out of that 250, well, okay, at least we're still up 150. But, right here down 187, 190 unrealized, there's no need to be only up $40 on the day being that aggressive this late in the move. So, coming back and rewatching the videos, these are the type of things that we can see we need to improve upon. It's hindsight, man. Hindsight is 2020, but real time, these indicators are there and they're well and alive. And so, are we going to take the indicators? So when we look back at the stock, that I switch back to it. Let's see. Yeah, so it came all the way down to about 175, it looks like, from that level of 96. So, it's like, the stock had no chance right there. No chance. It's a poor trade, really. Aggressive trade. Giving back a lot of profits. Doesn't make sense to do that. And so it looks like it gave a very elongated ABCD. But just, looks like it was a slow grind. This move up was the move to be trading. Right here is all the backside. Are there opportunities here? Smaller opportunities? Yes. But wouldn't it be much better to be buying here than to be taking trades in? You know what I'm saying? So being selective and doing good analysis towards the right type of and doing good analysis in general so that we trade the right types of setups is also key. So there's two. Was there two in this video? Okay, looks like it was just one. The other one, okay, just one as well. So we can mute this and move on. Video number 3. We have two areas that we'll look at. The first one will be on MDRR. This is on December 31st, 2021. Let's see what these trades have in common, right? In terms of these losers. So let's see, MDRR. Okay, volume looks all right. Tight spread. There are a few bigger buyers and sellers. Okay, no problem. It's a little cheaper. Let's see, time 39. So the 5-minute candle is about to close. The new candle is about to open. So far, this one is looking a little bit better than some of the other ones. We're coming into the VWAP. I'm watching the level right there, 35. I'm taking 2,000 shares. In fact, it looks like I have a limit order set out there for the order. So I get filled at 35. Let's see, so 34, 33. It seems to be coming down. I might have had a 5-cent stop in here, is my guess. Let's see. I'm out at 32. Let's see. I'm out at 32. I had a pretty tight stop in here. High of day was at 45. From 35 to 30, it's 5 cents. From 35 to 45 is 10 cents. So there's a 2-to-1 in there, but I stopped out a little soon. Let's see, was that for good reasons? You know, sometimes you'll be looking at the level 2, the time and sales, and it discourages you. Also, the candle here coming down didn't close. This is another important thing to watch out for at times, especially when we see the winning trades. We'll see this a lot, is that the candles will close above the VWAP and hold the level very tightly. Right here, we're stair stepping down. Looking back at it, the volume on that red candle wasn't awful, but it is pulling back a little bit more than expected. So it seems like it might have been a good sell, but let's fast forward and see if we came back to this stock. MDRR, did we come back to this one? We'll come back to this other trade off the lows. Let's see, MDRR. Is it anywhere in here? NTRB. I mean, look at this stock. I mean, isn't this so interesting? For those of you who know me now, I mean, and who've been around, look at this stock. It looks like I've traded, let's see, an entry at the lows, an entry at the lows, an entry at the lows, 97, in at 976, out at 985. Why was I not like scalping in here? Like I don't know what I was thinking. I don't know. I'll have to rewatch this entire video to see what was going on as to why I wasn't aggressive on this move and then multiple stabs in here. It's interesting. It's so interesting. I did mention at the beginning of the video, we're not going to get a chance to see it, MDRR, but let's check that other trade off the lows. So high of day seems to have been around 8:30 plus or minus. We had a high of 9:10. The 5-minute candle has pulled back. Volume profile looks pretty good right here. Volume profile looks very good. Time, there's 2 minutes remaining in this 5-minute candle. This doesn't look like a bad entry. So let's see. We consolidate. Let's see. Had a high of 49. This looks like I'm out of the trade too soon. There's 54. It comes down to 30. I think that shakes me out of the trade right there. Okay, I see. 27. And I come out at 35 as it bounces up a little bit. Yeah. This is always tough. So this is one of the things with the trades at the lows to look out for. Is being in and then seeing an immense amount of selling pressure coming in. And we pull back from 55 to 25. You start to think in your head that that flush is going to continue lower and lower. I think it's a good stop, but sometimes, the way how the market is, the market makers especially, they'll chop a few traders out of the trades. Right here, the 5-minute setup still looks good. Maybe I could have used a bigger stop in the trade, because from 38 to 28 is about 10 cents. And that's exactly what the lesson is right here in this trade, right? From 38 to 28 is 10 cents. Is that a big stop? The answer is no. Now, from 38 to 18, that's 20 cents. And we could say that's a pretty reasonable stop, right? So assuming, and I'll put it up to the whole dollar, let's say 40, just for the math, right? From 40 to 20 is 20 cents, so 20-cent risk in here. And we can see that, let's see, the next VWAP is at 728. The next pivot seems like it was a little low as well. But okay, so we'll leave that out. But anyhow, so let's say a bigger stop, right? 20-cent stop, because what's the profit target right here, right? We're going to all of the trades with a specific risk and a profit target. The previous high of day level was 910, and I always watch at the previous high of day level for the stocks to crawl back up and get up there. And so from 840 to $9 is 60 cents, plus an additional 10 cents if it gets back to the highs. 70 cents. I would be risking 20 cents to make 70 cents. So there's a 3 to 1 ratio, 3.5 to 1 ratio in this same exact trade if I have my stop a little bit bigger. And what it does, I think if this thing pulls back to like 715, it'll be finished for sure for like a much bigger pullback. But we have to give the stocks room to overshoot the landing zone, and that's what I didn't do right here. And you can see right there, 22,000 share buyer gets in at 31, and that's someone looking to take shares. So let me fast forward through the day. How did this move ended up doing? We can see it pulled back a little bit, so we had lows. Let's check out these candles right here. Sometimes the entries aren't that bad, but we just have to have good analysis and put a very good stop in place and let the trade work. Right there, I'm out way too soon. I see the stock go from 50 to 30, so it's like I get shaken out of the trade. My stop is a little too tight. Now, if you're looking to respect the tight stop, you got to know that there'll be less room for error, or let's say consolidation in the trade. What's going on with the internet? Come on. The internet seems to be slowing down right now. Yeah, we pulled back to 820, So I'd have been very close to getting stopped out had I had a 20 cents. Let's say a hard 20-cent stop. And look at that. I mean, just look at that, man. 49,000 shares, guys. This is strong right here. This is absolutely strong. Someone is buying up 50,000 shares. And this is exactly... it's hard. What I realized is that it's hard to know on the days where the stock will pull back exactly to the penny to the level or a little bit below the level. But I realize it's always good to have a stop in place to give it room and have it be relative to the profit target. Because if we're looking to make 70 cents on the trade, why would I have a 10-cent stop? It's just too tight, you know what I'm saying? So we'll never know how low the stock comes, but getting in somewhere comfortable and putting the stop in place is the way to go. Because there will be days where it just hits 735. Well, excuse me, 835 and curls right back up. There'll be days where it comes down to 725, 728, maybe even 720 like it did right here, and then curl back up. And so putting out the order and having the stop in place is the way to go, because if you decide to wait for the stock to pull back more, let's say, hey, I'm watching 38, But I'm like, hey, let's let this thing go lower because it could drop down to 20 and that'll be a bit of a lower entry. If I'm in at 20, then I can have a 5-10 cent stop. There'll be days where you miss the trade because you waited longer. That's happened to me numerous times. And there's days where it's the opposite, where I'm like, okay, um, I'll wait for that lower entry, and of course it stops right to the penny and curls right back up. So you got to just be consistent with one or the other, and go for it. And for me, I realize is to just get in where I'm comfortable on the lows, and then put the stop in place. So big bit. I mean, this is lovely right here. Lovely, man. And then we had that buyer of 20,000 shares come a little higher. What was that earlier, or was it right here? That person is moving up the ladder. It looks like. Okay, maybe not quite. But anyhow, it's still a good position to be in, that high up. Those shares are getting filled. You see, and being willing to get back in the trade right here is a good idea too, because I can now adjust my stop to the low of day levels, give it another 15 cents of risk, and I'm in lower with a move opportunity now to go all the way back to 910. So from 25 to 910, there's that much more profits in there. But sometimes you gotta reduce size appropriately. Let's see how this stock plays out. We'll skip ahead now. So there's 840. It's curling back. Let's give a big jump. Man, the buffering is killing me. The internet seems to be slowing down a lot here. This candle looks like it got up there to $9. Let's see. Let's come back a little bit more. Come on with the buffering. $61. We still need to go back a little bit more. $69. And this is exactly where it's prime time. Now, I would have expected this to curl through the highs because we had the first 5-minute candle make the new high. It continued going. We can see that this setup was excellent in terms of the volume profile, but we just needed a better stop because our green candle bars were much bigger than our red volume, our red 5-minute candles on the pullbacks. And imagine being in at 25 with 1,000 or with 700 shares, and the stock is now at 78. I know some of you probably, and depending on how you guys are with your personality, you might be holding the entire position. Some of you might be holding half, like I am. That I usually look to do, let's say, because I wasn't in this trade. Or some of you might have sold three quarters. Some of you might have added back. I mean, who knows? Some of you might have kept the 700 shares, added 750, now have 1,400 shares with an average of, let's say, 40, maybe 38 or so, somewhere in there, plus or minus 35. And, the stock is going higher. Maybe you're taking off 700 shares from 25 and now holding at 50 with a trailing stop of 10 cents. Right? There's different ways you can handle it and approach it. There's 78 on the ask. So it's a really big trade at that point. 85, and from 90, it gets up to 90 before pulling back right here quickly. It's a sharp pullback there, but we can see the trade worked out to perfection, but my stop wasn't well documented. So I think it's a very good review, right? Because we're seeing, and this is why on the losing days, we can sometimes learn more than the winning days, because we can see exactly what we need to improve on, what not to do. So a couple of lessons here for the video so far today. I would say pay a lot of attention to the candlesticks on the 5-minute. Look to see look at the volume profile. See how the volume profile is looking on the pullback candles in relation to the stronger green candles coming up. That's usually a really big sign. Map out your pivot levels and have those trend lines be bold and coming across so you know where your levels are. Set appropriate stop losses based on the risk and reward potential in the trade. If you can make 60 cents, $1 a share, what's the use of having a 5-10 cent stop? You're not giving the stock enough range to move to be able to conduct itself properly. So keep all of that in mind. I think it's a good review. No intro video because the internet is acting up. I usually transfer the video from my cell phone to the computer through the internet, the Wi-Fi, but the Wi-Fi is kind of acting crazy. So yeah, that'll do it for this one. I hope you guys did enjoy. Trading off of the supports, part 2. Trading off the lows, taking losses, taking lessons, and improving to be better. So if we see these entries coming again, and I think they're starting to come around again, I think we'll be ready. I think we can do much better with even bigger size. So I look forward to the challenge as always, guys. It's been Relentless Trader, and I am, of course, signing. Well, before I sign out, be sure to hit that thumbs up button. Consider subscribing if you're new. Check out the links down below for the Momentic scanner, the Discord, the Instagram and Facebook pages. Turn on the notifications, and I'll post the links on this video here. This one, of course, is being recorded. For these previous videos, I'll copy and paste the links so you guys can go check out these areas on these trades off the lows. Do we have one more? We might have one more. Looks like we do. Did I miss this one? Which stock was this? The 27th of December. So it doesn't look like we're finished yet. AVCT at 49.45. So AVCT, one more to go over before we're finished. Let's take a sip of water. Okay, there's a couple of things I'm noticing. The previous high of day level is right here, right before this quick breakout, this big breakout here. We kind of consolidated. That looks like levels of 260, right? What's my number one rule for trading off the lows? I only want to get in on the first attempt at the lows. This came down once, twice. This is the third time at the lows. I should have already been in the first time. This bottoming wick right here, in at 60. Look at that. I could have already sold half at 75 at the highs. You know, even if I held through this big drop, it curls back up and starts to reject again. I can come out halfway, 63, 64 with some sort of gain on the remaining balance of the shares. One red flag already. Right? Looking at the volume now, second red flag. We had a doji candle, which is all right, but look at the volume bar. It's in close proximity to our 5-minute candle. Did we go over this one? I don't think so. Well, I can't tell. I can't remember. ADGI. I don't think we went over this one. But, yeah, anyhows. Look at the channel right here, right? Another bit channel, essentially, if we pull this trend line back a little bit more this way. Look at the last breakout level. And look at how this last area here at the lows would have been exceptionally well. You know, look at this 5-minute pullback here at 9:55. So essentially right here, it dips down, and VWAP, we had lows, it looks like of like I would say 43 at the time. It looks like the VWAP was around, or even 42. VWAP is around 39. So the previous high of day level down here, previous high, was aligning properly in close proximity with the VWAP. So dual support levels in one. This is an area here where I could have been watching with very aggressive size with a tight stop. This trade right here, this trade is the type of trade to take 5,000 shares in. And, you know, with 5,000 shares, 10 cents is $500. With 5,000 shares, being that it looks like this low right here is like at 42 or so. 42 with a stop, let's say, at 39. Risking 3 cents. Risking 3 or 4 cents. Risking 250. And it's dual support. And so once the 5-minute volume holds up, we can see a move. Now, looking back at it, this red candle was in close proximity to this 5-minute candle. So, you know, maybe it's not the ideal setup, but close. There'll be days where we have a big green bar like this, and this is our red candle. And we know for a fact that it looks very strong. It's obvious to tell. But right here, similar situation. Big green bar, but big red bar. So, you know, it's a little harder to know, and it's not as clear what and obvious what the stock is going to do. I already let the first and second setups go at the lows, so more than likely we know what's going to come right here. So I'm long 2,000 shares at 60. Why did I wait so long to take this entry here, man? Unbelievable. Doji candles are a sign of indecision. We had a bullish engulfing right here. That gave me confidence, but selling volume was just too high. And look at that. Goes lower. And from, was that my first trade? It looks like it was. From flat on the stock to down 177. Unbelievable, man. Unbelievable. So we got to be very careful at the support levels, right? This area here, I like because of the dual support that's coming in at the 5-minute. But there'll be days where it's more obvious and where the stocks do have tight spreads like this one where we can take much bigger size. And so that's what we got to look forward to and ride the wave up. Because, you know, there'll be days, man. I think there'll be days it's coming where we can be in, you know, 5,000 shares, you know, at 240 and scaling out throughout this entire push right here. But that's going to do it for the video, guys. Once again, hopefully you did enjoy. Hit that thumbs up button if you did. Check out the links down below. Subscribe if you are a new viewer. It's been Relentless Trader, and I am, of course, signing out.